Okay, can everyone see my screen?
Yeah.
Yeah.
Awesome. Awesome. All right, let's get this party started. All right, so as you're all aware, tonight we're going to be covering psychology of Forex. So psychology of Forex is probably the most common factor on Forex traders losing money or losing period, okay? Would you believe me if I told you that 90% of positions that you open up in Forex trading would have been in profits at least at one point of the time? However, at more than 80% of the time, so without proper guidance, people end up closing it at a loss. How many of you here have opened a position while you're trading and at one point it was in profit, but it ended up in a loss?
Yeah.
How many of you?
Yes.
Me.
Yeah, happens quite often, right?
Yeah, definitely.
This is a very obvious question, but what do you think the factor is when it comes to that?
Greed. Fear.
Okay, what is all that have in common? Where is that all coming from? The title's like on the screen, guys.
Psychology.
Psychology?
Correct. So it's your mentality, it's your psychology, right? Anything to do with your emotions, anything to do with your state of mind, it has to do with what?
Psychology.
Psychology.
Correct. All of that has to do with psychology. And I'm going to ask you a very tricky question. It's not really a tricky question, but a lot of time people do get this question wrong. What do you think psychology have to do with Forex?
It plays with your emotion.
Yes. And do you think emotions and Forex trading mix?
No.
No, it does not. In fact, emotions does not mix with essentially anything that has to do with you making money in business. Okay? It's not even just trading alone. It's not even investing alone. Okay? Anything you do, virtually anything you do that is money, finance related, as soon as you involve your emotions, it's game over for you, man. There's a reason why. We're gonna cover the most common factor of why people lose, why people don't end up closing in profits, and how to alleviate some of those problems. What is psychology of trading? So we're gonna do a quick recap on this. Psychology of trading is your emotions and mental state that help you navigate your success or failure when trading. Okay, so that basically means that psychology, once you master psychology of trading, you'll be able to control your emotions and your very mental state of mind to be able to drive yourself into success instead of failing. So rather than closing at a loss, you'll be closing in profits more so. Okay, trading psychology represents various aspects of individuals' character and behavior that factors into their trading actions. Do any of you know what that means? There are certain behaviors that Forex traders oftentimes admit. A very good example would be greed, right? That's a very, very common example. Okay, so for example, today with the UCAD that I called out, okay, let's say some of you gents decided to do for example, like 10 lot size on it, which is quite ridiculous for some of you. But for me, that's a standard lot volume that I use for my equity based on a very high accurate trading. I use anywhere between 7 to 10 for something that I know will make me money. So let's say I use 10 lot or one of you use 10 lots. And as you all are aware, it's spiked up approximately 1,000 pips, right? Can any of you do the math and tell me what 10 times 1,000 is?
10,000?
Correct. So how much profit do you think you would have been at the highest of the high during the UCAT spike based on the fact that you bought 10 lot size?
10,000?
Correct. You'd be up 10,000 US dollar profits. What do you think most of you, in fact, most people in general, would do when they see the $10,000 profit fluctuating? What do you think most people would do?
Most people would close it.
You really believe most people would close a position that's rising in profits?
I think people would just
They
get
wouldn't.
greedy and try to
They
keep
would
pushing.
not. They would not. What do you think the most people, we're talking about like general public, people with no discipline in psychology, people with no education in psychology of Forex, what do you think their action would be towards this?
Push for more.
Greed.
Exactly. Yeah. So greed, that's correct. But what do you think they would do with greed?
Just wait for it to go higher.
Exactly. Right. So hypothetically, you know, let's say you observed an indicator that clearly shows consolidation and resistance, meaning the price is now showing resistance against the support. Okay, so this is basically the sellers pushing back, saying, no, we're going to take control or try to take control. What do you think the logical choice would be at this point to do once you see the consolidation and you're at $10,000 US profit in less than few hours, you're up $10,000 US profit? What do you think the logical choice would be to do?
Close the trade.
Exactly. Now, what do you think most people would do when they see the little bit of support and they're seeing that the price is still fluctuating up and down?
They'll keep it running.
Exactly. Now, what do you think will happen to all those poor souls that ended up keeping the position open?
Price went down.
Exactly. A lot of times, we're talking 9 times out of 10, the price will retrace. Now, I'm going to give you guys a bit of a conspiracy theory and slash an actual thing that occurs very commonly. Okay, so this is an actual thing. I hope when I post this YouTube video, I don't get flagged for posting such comments, but it's an actual thing. So, did you all know that almost 80% of U.S. currency is being controlled by the banks? Do you all know this?
Yeah, I seen
Oh,
it
yeah,
in a
for sure.
YouTube video.
Yeah.
Okay, so if that is the case, you have to understand one thing. When Forex traders make profit in the Forex trading platform, where do you think that money is coming from? Who do you think the money is being taken from?
The bank.
Exactly. Now, what do you think the banks not want to happen?
For you to keep taking the money.
Exactly. So what do you think the banks would do when they see the fluctuation rise up and all the Forex traders are buying into that trade? What do you think the banks want to do?
Retracement.
Exactly. Man, that I'm so proud of you. Who said that?
They
Alex.
want to make you feel like you're winning.
Who said retracement? That is the perfect word to describe what the banks would do. Who said that?
Alex.
Oh wow, Alex, I'm surprised coming from you. I'm just kidding. Not really. But no, that is a very accurate answer. The banks will create a retracement. So basically, all of you that gone into that UCAD trade, you might not end up in a loss, but you probably will lose like 80% of that profit. And once you start to see it drop, most of you will end up having to close if you have any type of common sense. You know what I would personally do? As soon as I observe that the momentum is dipping all the way down below 90 degree, you know what I would do? First of all, I probably wouldn't even let the momentum build up that low. I would probably close that trade instant I see any type of reversal or indication that it may reverse. And this is where Fibonacci retracement tool can be useful as well. You can utilize the retracement levels based on the fact that it just went below 78%, 62% retracement level. And once it heads towards 50% retracement level, it's very clear that it's going to reverse. However, I personally, like I said, I don't mean to be cocky or be too conceited, but I would not let it go down that far because of years of trading experience. However, I cannot say the same for most people. Some gents may even hold the position all the way up until either it's negative, or if they're lucky, it may bounce back. Wishful thinking, though. Most people may hope for it, but it might not actually happen. Hold on a second. I'm just gonna pause the recording.